There's a lot of doom and gloom out there, but in the next 18, 24 months, I think that there is a massive opportunity to build generational wealth. So in today's video, I want to talk about how we are going to go about doing that, what we're up against, the situation that we're in, what we can do from the most practical perspective, and the mindset that we must have going into the next 18, 24 months. Let's first talk about the state of the situation that we're in. We're in a recession. There's no doubt about that. The job market looks strong on paper, but it's actually very weak. Look at all the layoffs that's happening in tech, in real estate, in business services. Financial services, they're going through hiring freezes as well. The only sectors that have been more resistant to the current environment is perhaps healthcare, perhaps energy, the sectors that have been doing well in the S&P 500. But generally speaking, the mood among many, many good Americans right now is not very good. But things will get better, and I want to help you prepare for those next 18, 24 months. In the meantime, stocks, they are going through a dramatic reset. This video is not about a deep dive into stocks or real estate. The rest of my channel covers that. Today is a big picture overview about how to prepare for the new environment. What you must not do is sell in a bear market. Because if you sell in a bear market, you must make another decision, and that's when to buy back in. And unless you time that other decision correctly, you could miss out on when the market recovers. Because as you know, a recovery can be swift, it can be furious, and it can be violent, okay? In the meantime, if you're not yet a homeowner, I'd say you should wait. You should rent. You should let mortgage rates cause immense demand destruction. You should allow those higher mortgage rates to make home prices fall even further from here. Look, I get it. The national home price index might not fall significantly, but there are certain neighborhoods where, if there's a lot of tech employment there, if there's a lot of people in real estate professions, those neighborhoods, those prices are going to come down a lot. You're going to have the opportunity to become a homeowner in the next 1 to 2 years if you play your cards right. So if you're not yet a homeowner, I really think you should be renting right now. You should be saving up capital. You should be putting your cash in savings accounts that are yielding 3 to 3.5%. And I'm going to link in the description below some options that consumers have now to park their capital. Now, in a recession, here's what's going to happen. What's going to happen is that there is going to be a massive deflationary bust. Yes, I get it. That's hard to imagine right now. Right now, it's stagflation. Everything's expensive, yet growth is weak. The outlook is generally not that great. But if the Fed raises rates beyond a certain point, demand destruction is coming. And listen, that's going to cause deflation. We're already seeing it in the car market. We're seeing it in companies like CarMax. We're seeing it in companies like Carvana. It's very difficult for consumers to buy vehicles in this environment when the auto loan rate is getting more expensive literally every 2 months. That is a struggle that consumers are facing in the car market, in the housing market, for consumer debt. But mark my words, everything will be less expensive when a deflationary bust happens in the next year or two. But you got to be ready for that, because a deflationary bust could be toxic for the stock market. It could be toxic for real estate. So you need to tread as carefully as possible. Now, if you're a small business owner, this could be potentially good news for you, because there's less competition. Your competitors, even if you're a freelancer, okay, they're going to advertise less because they want to pull back on spending. They want to cut down on expenses. But for people, for organizations that keep their advertising budgets going, they're going to be able to get a stronger return on investment. Just think about it this way. Think about YouTube ads, Facebook ads, TikTok ads, Snapchat ads. All those companies that don't advertise on those platforms anymore, if you are advertising on those platforms, your message gets more reach and more impressions because the ad dollars will be stretched further. And so there's more opportunity for entrepreneurs. And so if you're currently still working, now is the time to build up a second source of income. Now is the time to build up skills that will allow you to supplement your income and save up cash. Because when the bull market recovers, it's going to come back swiftly, and it's going to allow you to ride a very, very strong recovery. Now, in the meantime, there are a couple things that I think that everybody should be doing. Number one, using this time to invest in your personal growth. Invest in your knowledge. Invest in acquiring better and stronger information to guide your decisions. You want to cut back unnecessary expenses, and you want to ask questions such as, well, if your income goes down, what can you do to save on expenses so that you can still save money in this environment? You want to hold on to cash. You want to park them in savings accounts that are yielding 3 to 3.5%, and you want to protect your career as rigorously as possible. You want to keep your job, because those who can keep their jobs, they're going to be the first to get promoted once things get better. You want to double down on yourself. You want to become a stronger analyst if you're in finance. You want to be a stronger coder if you're in engineering. You want to be a better healthcare professional if you're in healthcare. And you want to make sure that you're adding as much value at the workplace as much as possible. Let me give you some examples from really good posts that I found on LinkedIn recently. Every company is in the business of providing solutions. You want to help your team, your manager, provide as good solutions to the projects that you're working on as much as possible. Be more efficient. Come up with better ways to tackle the problem that you're solving at work. Over-deliver. This is a time when budgets are really under pressure. I know there's a lot of talk about quiet quitting out there. Don't do that. There's a lot of YouTubers who are talking about quiet quitting, and some of them I respect them very much, but don't do that. People who do quiet quitting, they'll get fired. They'll be quiet quitting their careers, and that will be the end of their opportunity to get promoted and start their own business, because you can't start your own business without resources. So over-deliver, work harder, add more value. Don't fall into quiet quitting. That is an absolute trap. Don't do that. Also, do whatever it takes to make your boss look as good as possible, because I don't know if you know this, but it is your boss who dictates your future at the company. Look at Twitter. Elon Musk asked the managers in engineering across the teams to pick out which engineers wrote the best code, who contributed the most, and those are the people who get to stay. Because right now, you see Twitter is laying off half their employees. That's not pleasant at Twitter, but people who have added the most value, these are the people who are safest in a recession. And when things get better, those are the people who get promoted. They're going to make more money. Watch this, they're going to make more money, and in a deflationary bust, their dollars are going to be worth more to invest in the market, invest in real estate. Now also, this is something that's a little bit that I haven't talked about on my channel very much. I'm seeing that there is record central bank buying for gold and precious metals. You see, the dollar, it will not be this strong forever. So it is important to understand when the dollar, if you're an American, when the dollar weakens and other currencies appreciate, how do we make sure that we hedge the value of our currency? Precious metals is something that I'm actively looking into. This is something that I haven't looked into before, but given the state of the global economy right now, it is something that definitely merits our attention. On top of this, if you're an entrepreneur or if you're thinking about starting your own business, creating a second stream of income, this is something that I want to share with you. This is the framework called Ikigai. 4 principles that we have to follow: passion, mission, profession, vocation. We have to do what we're good at. We have to do what we love. We have to do something that the world needs, and we have to do something that the world will pay us for. And more importantly, this is a principle I want to share with you. And if you do this, you will be successful. The value that you offer needs to be higher than the value that you ask for. This is the playbook that I follow for the organizations that I lead. And this is the playbook that's made me successful in these areas. Take a look at this. For example, before I started my investment community, I looked at what other companies offer. I took a look at Zacks Investment Research. I took a look at what they have to offer. I took a look at The Motley Fool. I took a look at their pricing. I took a look at what they have to offer. I even signed up for these services to understand what they do. And I can proudly tell you that when I designed my investment community, I thought to myself, okay, I'm going to price lower than these other services, and I'm going to add more. Now, the reason I do that is because I understand that that's the consulting model. Better, faster, cheaper. That's actually how McKinsey and Bain and Company started. And that's my playbook for you. If you do this, if you're a small business owner, you're a freelancer, if you are a consultant, if you offer more value than you charge, and you're really good at what you do, it is only a matter of time until you get discovered. This is the opportunity to start a second venture while the economy is weak, because when things are strong, you're going to have a lot of competition, okay? You're gonna have a lot of competition. When things are strong, you're gonna have a lot of competition. When there's a recession, when there's a depression, businesses, they go out of business. Freelancers, they give up. They stop whatever they're doing. It's an opportunity for you to step in and fill that void. But you have to identify what's your strength, what are you good at, what is the world going to pay you for, and what do you actually, what can you imagine yourself doing for a long, long time? Because you have to be this, you have to be in this for the long term. And the last thing that I want to share with you is pretty much an open secret in order to be more successful, and that's reading more. It's no secret that successful people, they read more than unsuccessful people. So I encourage you during this time to acquire more information, develop a love for reading, because it is this habit that is going to change your destiny over the next 18 to 24 months. So guys, I know that this video was a little different from the videos I usually make on the stock markets on US and China, but I wanted to give you a high-level overview of how to take these next 18, 24 months to crush it, to be more successful, so that you can have more money to invest in the markets, which is what the rest of my content on my channel is about. With that said, guys, if you like this video, subscribe, turn on the bell, and I will see you in my next video.